Join me as I dive deep into the world of Sqqq stock and see if I can predict whether it's about to explode. Sqqq is an inverse ETF that aims to profit from declines in the Nasdaq 100. It's been capturing attention lately, and for good reason. This fund is designed to move in the opposite direction of the Nasdaq 100, which means when the tech-heavy index falls, Sqqq tends to rise. Investors are keeping a close eye on it, especially during times of market volatility. The current market conditions are quite interesting. We're seeing a lot of volatility, which can be both a blessing and a curse for investors. When the market is volatile, it means there are big swings in price, and that can lead to significant gains or losses. Investor sentiment is also playing a role, with some people feeling optimistic about the tech sector and others being more cautious. This mixed sentiment can lead to unpredictable market movements. As we look at the factors that could lead to a price explosion for Sqqq, we have to consider macroeconomic indicators. Things like interest rates, inflation, and economic growth can all impact the performance of tech stocks and, by extension, Sqqq. Tech sector trends are also crucial, as any significant shifts in the industry can affect the Nasdaq 100 and Sqqq. Recent news, such as earnings reports from major tech companies, can also have a big impact. If these companies report lower than expected earnings, it could lead to a decline in the Nasdaq 100 and a rise in Sqqq. The recent performance of tech stocks has been a bit rocky, with some major players experiencing significant declines. This could be a sign that investors are becoming more risk-averse, which could bode well for Sqqq. Another factor to consider is the overall economic climate. If there's a recession on the horizon, it could lead to a decline in tech stocks and a rise in Sqqq. The fund's expense ratio and trading volume are also important metrics to keep an eye on. A lower expense ratio and higher trading volume can make Sqqq more attractive to investors. The critical insights that suggest a potential surge in Sqqq stock are worth paying attention to. The fund's chart is showing some interesting patterns, with a potential breakout on the horizon. If Sqqq can break through its current resistance level, it could lead to a significant price increase. The relative strength index is also indicating that Sqqq is oversold, which could lead to a bounce back. Additionally, the moving averages are converging, which can be a sign of a potential price explosion. In terms of critical data, the recent increase in trading volume is a good sign. It indicates that investors are taking notice of Sqqq and are positioning themselves for a potential move. The fund's assets under management have also been increasing, which can be a sign of growing investor confidence. Furthermore, the options activity is worth keeping an eye on, as it can provide clues about investor sentiment. To recap, Sqqq is an inverse ETF that's been capturing attention due to its potential for growth during market declines. The current market conditions, including volatility and investor sentiment, are contributing to its appeal. The factors that could lead to a price explosion, such as macroeconomic indicators and tech sector trends, are worth monitoring. The critical insights and data, including the fund's chart and RSI, suggest that Sqqq could be poised for a surge. However, it's essential to keep in mind that investing in Sqqq comes with risks, and investors should do their own research before making any decisions. So, what do you think about Sqqq's potential? Share your thoughts in the comments below. If you're interested in learning more about stock trends, be sure to watch my next video.